Nifty valuation is going to be very cheaper from March 31st. So, should you go and buy the stocks just because the valuation index valuation is going cheaper? So, I just got this news in Business Line. I'm just going to talk about this today. Hi, hello. This is Ganesh Santuri, your stock market profit coach. I help you in multiplying your money by investing in stock market, and I'm the author of the book called One Page Stock Market Plan. So, today's topic is all about how the Nifty valuation can become cheaper so easily, and that too by close to 12 to 15%. Is it possible? I'll share that. Okay. So the point is the Nifty Valuation Index. Nifty 50 means the top 50 stocks in the Nifty NSE Index, the National Stock Exchange, and they have a valuation like, for example, Reliance is in the top 10, top in the top one or two, right? It goes between TCS and Reliance, and in the last 1 year, Reliance had marched ahead of TCS and all the companies just because they got huge amount of investments from all across the world. So just because of that, Nifty in Nifty, if the Nifty exchange is increasing, but right now is say for example it is around 15,000 points Nifty's, and Reliance is increasing by 2,000 points, means it will add index weightage of around maybe 10% of the total increase, right? So if the Reliance is increasing by 100 points on a day, and it will give you almost like 15 to 20 points contribute to the Nifty increase. So that's how each stock, Nifty 50 stock, all the 50 stocks will contribute some points, so that on a particular day, and some stocks will keep increasing, some stocks will keep decreasing. So consolidating both the things together on a particular day, if the Nifty stocks are increasing, it means index is getting positive in green on that day, and if it is red, it means it went negative, and that's how it is. So what is happening is that the Nifty index and everything put together, there is something called earning per share and the price earning ratio, and based on that only we will consider whether the Nifty valuation is high or low. And Nifty PE right now is around 40, and I think today it should be around 41, and the earning per share is around 370, and this is consolidation of all the 50 stocks put together. And the point is, for all the stocks, it's almost like all the stocks meaning all the business, right? And all the business, what they do is they will do the two types of earnings reports. One is consolidated, one is standalone. Standalone means if it's a single company, it's called standalone, and if it's a group of companies put together, it is called consolidated report. So for every earnings per share, it means for standalone company that the earnings per share will be totally different. Say for example, it is for 10 rupees, and for consolidated, it may be around 11 rupees or 12 rupees. There will be a small minor change. In most of the cases, it will be consolidated and standalone will be more or less the same, right? That is the difference. That is the difference, and there is no difference at all. But what happens on March 31st is that, and SEBI and everybody said that from now on it should be consolidated earnings, which means if there is a group company like Tata Motors, because Tata Motors has so many subsidiaries, so everything put together, consolidated earnings may be positive, but standalone Tata Motors is negative. And for example, Sun Pharma, and Sun Pharma's standalone company is negative, meaning the earning per share is not that much good. But if you're consolidating all the subsidiaries of Sun Pharma, that will become a good positive company to invest. I mean, consolidated earnings will be much higher. And why it is more significant is that when standalone and consolidated becomes consolidation all across the Nifty, 39 companies will see a huge difference. Meaning, out of 50, 39 companies will see a huge difference. 9 companies will become not a beneficiary, because standalone they are good, but after becoming consolidated, they become a negative earnings. So put together everything, 50 stocks put together, if you look at on a consolidated basis, the earning per share of the Nifty PE will move from 370 rupees to almost like 421 rupees, which means earnings has improved. If the earnings have improved, and if you divide the current Nifty valuation by the earnings, 15,000 points divided by 421, and the stock index will come down from 40 points to almost like Nifty PE from 40 will come down to 35, 34, depending upon the Nifty valuations. So that is a huge difference that is going to create on in the next couple of days, not next couple of days, in the next couple of weeks. From March 31, this is going to be the thing. So just because this thing has changed, nothing has changed on the ground. Analyze how the economy is, how the company is, and then put your money. Just because Nifty valuation become cheaper, just don't go and invest, because underlying underneath nothing has changed, right? This is what happened when government has shared that they changed the the GDP calculation, and some of the people who are ardent followers of all these things, they said don't fudge the data, and that will create a huge problem in the future. But that is what it is, because if you want a positive thing, people will start changing. So right now, that is what is happening. Let's see, as per the SEBI standard, we should follow it. And but nothing is changing on the ground, meaning companies valuations or companies things are not changing. Just because earnings has been made to count on a consolidated basis, there is a small change in the Nifty PE and EPS. So but all the valuations and everything else, kindly make sure you are following the things, right? Thank you so much for watching. If you have any doubts with respect to today's video, kindly post your questions so that I can answer your questions. Thank you so much. And don't forget to click the subscriber button so that you get continuous videos and you make unlimited wealth in your life. Thank you so much for watching.